welcome to Behind the Mirror podcast. Thank you for watching, listening, liking and subscribing. I'm Lisa.
Hi, I'm Laura.
And today's guest, we have Thomas Marshall from KPW. He is going to be talking to us all things finance and accounts, some top tips for some stylists, but I suppose even if you're not in the world of hairdressing, if you own your own business or you're looking to start your own business, then he's your man.
Thank you very much. You'll see that I'm just new.
I love that.
The only podcast I ever watched are the football ones.
Oh, they were in recording this morning, actually. You're just a couple hours too late. He's in for the hair banter. So we thought we would kind of get you on and pick your brains on behalf of other hairdressers on topics that probably, I would say, I don't know if I speak for everyone, but they kind of scare me.
Yeah. I think particularly just now because there's such a, the cost of everything's up. And I think for me, being a salon owner in particular, I think it's quite scary just now on how to maybe manage things in an environment where people don't really want to spend money, but the costs are up and yeah, it's quite tricky.
You know, we talk about the cost of living crisis, but anytime you get into Glasgow, you can't get a restaurant.
It's
space,
so true.
So people are still spending money.
Yeah.
Aren't they?
And it's so true that I think that a lot of people now are just aware how they spend their money and they look at the value of spending their money. So people are quite happy to put into things, you know, to spend the money, but it's just they're choosing where to put it. I think that's the thing.
Don't you just find, I certainly come across this, that people just live for the moment?
Yeah. Yeah.
YOLO.
They live for the moment. They how many households have, like back in my mum and grandparents' day, it was about having 6 months' salary set aside. How many households these days have 6 months' salary?
I think that's called a cruise, actually.
It's very hard to save now, though, isn't it? And
So
do you think a lot of people have just went, do you know what, I can't save anyway, so may as well just enjoy what I'm earning? I think that's probably the way I live.
I think there's that, and then cost of increased. Back in the day, people would go to the auction and buy a car. Now I've got a household.
How old are you?
I remember it. I remember
I'm
that.
50.
Yeah.
50 this year.
People go to auctions to buy cars.
I remember that.
Aye. People would own their car outright, wouldn't they?
Oh,
Yeah.
wow.
Whereas now, I'll get into households and they'll be paying £2,000 a month in car payments.
Yeah. There's a lot
That's
of
insane.
people want to look like they're earning a lot of money, but yeah, how much of it is actually
Like
it's
the
just
fake it till you make it.
PCP and stuff, totally. Yeah.
And then it puts them in the debt. Do you also find as well, like, there's a thing that, I don't know if this is true or not, but they say that people that are rich because they don't spend money. So, like, they'll be the ones that don't tip very well in
100%.
restaurants. They're the ones, yeah,
And
but then
salons.
your wee old dear that actually just lives day week to week, they're the most generous. They'll get you a box of biscuits when that pound meant a lot more to them than...
That's so true. I do think that is very true. The best tippers are always ones that don't have a lot.
So I think one of the biggest issues in the hairdressing world is we get taught to be a hairdresser, but you don't really get taught to be a business owner. And that's where we thought it'd be helpful for you to come in and give some tips. Because I don't remember anybody ever sitting me down and talking about pensions. Do you? And like, so would you give us a wee general gist of, so, and I suppose we're talking about hair, but it could be any business. What is the situation with pensions? Walk us through it from, if you were to be a Pensions for Dummies book right now. Not that I'm calling us dummies, actually. That's a stigma that we don't like. But yeah, where would we start? Obviously, there's the opt-in, opt-out.
So if you're a company director and you've got staff, then the pension regulator will give you an enrolment date for when you've got to enrol your staff into pensions. Those staff have got the option of, do they want to opt out or do they want to opt in? If they want to opt in, then the employer has to pay at least 3% into their pension. The employee has to put 5% into their pension. You'll go into a lot of hairdressing salons and there'll be a lot of self-employed people. There'll be guys that are just renting a chair. There'll be so these self-employed individuals will be different. They'll have their own companies. They maybe want to set up personal pensions for themselves as opposed to the company they work for.
So if you're a salon owner and you employ staff, it's your job to enrol them in a pension scheme.
Yes.
And what if they opt out? Do you not need to pay anything?
Don't have to pay anything at all.
So
Right.
see how, because I was always led to believe that once you earn a certain amount, is it £200 a week or roughly, and then they have to enrol in it. So is that not true?
I don't know.
I'm not
To be honest,
sure.
I think that's one for
I
an
just,
accountant.
yeah, I'm not
Maybe.
sure.
A certain level, they automatically qualify for national insurance
Maybe that's what it is
contributions.
then, yeah.
So that automatically qualifies them for the state pension. Whether that's the case for auto-enrolment or enrolment, I don't actually know.
See how if you've got pensions from other like jobs that you've done, can you put them all together,
Yeah.
or can you do that?
So today I've just had a client on the phone that had 4 or 5 different pensions, and we've kind of brought them all together to make them easier for them to manage.
Yeah,
And then they're going to start contributing towards this new pension every month.
yeah.
But a lot of guys out there don't realise how easy it is. I think people make pensions sound more complicated than it is. Effectively, it's just a savings platform, isn't it?
Yeah, but it's a kind of gamble as well, isn't it? Because you can put it into high risk, low risk, and all that. I would briefly remember doing something like that at law school, but I don't. Well, you know me, I'm absolutely hopeless with numbers.
There's a lot of unregulated advisors out there, and I think that's the worrying thing within
Right.
any industry. You'll get advisors out there that will kind of portray themselves as a financial advisor, but they're not a financial advisor, they're not regulated. They'll maybe put your money into, I've seen it in the past, storage containers or unregulated investment, parking sites.
Like an investment,
Oh,
right?
and the client then loses all their money and they've got nowhere to turn.
That's scary that MD can say that I could say I was a financial advisor, give me your money.
But it's like there's no regulation. It's like what we were talking about hairdressing. There's no regulation on it.
In this country, it blows my mind how many different industries don't have a regulation on them.
I've had clients in the past that have invested into these storage containers and the storage containers then go bust and that investment is just goes from 50,000 to zero overnight.
And if they get no leg to stand on,
They can put a complaint in.
Jeez.
But I mean,
a 50 grand complaint.
that one person put a complaint in and they're still waiting to hear the result. That's 2 years down the line.
Jeez.
So the likelihood is they'll not get anything back.
So top tip then, make sure that you find, is there something people can look for to
You
know?
can go into the FC register. So if you speak to someone and you can go into the FC register and search for a person's name, you can search for my name and you'll see that I'm on the Financial Conduct Authority register.
Oh, okay. So we'll obviously put your details and the details of your company as well on the episode if anyone's listening and has any questions of their own or wants to have you sort pensions. I think that's actually quite interesting because a lot of people before they're a hairdresser might have had other careers, you know, waitressing or whatever they might have done. Like, that's what I did. That's why I'm mentioning that. But there might have been other stuff that it sounds to me that's brain fry trying to think about where I might have paid a pension to in my life. So are you able to find that for people?
You can go into HMRC and you can find my pension.
Right.
And HMRC will find your pensions for you. It's not a quick process. I think it can take a good while for them to do it. But you can go into HMRC and they will find your pension for you.
Because a lot of the time, if it's maybe on an old email address or you've moved house or something, then it is. I mean, I only just discovered the one that I was paying into before. It was People's Pension, I think.
Yeah.
And now, so we use Nest pensions in the salon. And that's why I was just asking about if you can put them two together now.
You definitely can.
Yeah.
It's not always the right thing to do because you could be taking something from a well-performing fund and transferring it into a fund that's not performed as well.
Yeah, okay.
You can also
So I
take
would
money
always
out
say-
tax-free and stuff, can't you? When you hit a certain age, you can dip money out tax-free.
Well, there's definitely not enough money in mine to do anything with. Not at the moment.
I think the issue with a lot of the population now, they are self-employed. And I've spoken about before about people are living for the moment and they're not putting away money for savings. I think if you look at if you put £100 away a month for 20 years, it's not a lot of money in the grand scheme. I think people spend more money in a takeaway each month. But that if you get an 8% return, that's 57,000 over 20 years, which isn't. It's a decent amount of money.
What
Yep.
do you think's the best advice for people that maybe are trying to sort of look towards? Because you will get people that are trying to save and, you know, financially, what's the best advice to give somebody, even just somebody starting out in business? Because you must see a lot of mistakes that people make and like hear mistakes and things that they've made. I think for me, like being a salon owner, it's making sure that you're not taking away your profit. I think, like seeing the money in the bank and making sure that you're putting well, especially for me with the VAT. I mean, I put the VAT away straight away.
That man's terrible.
Oh, it's the biggest bane in my life. I hate him so much.
I think I got stung by probably the easiest thing. When I started employing staff, I forgot about holiday pay. Mm-hmm. Like I forgot, like I don't know, like stupid thing about it now, but like I remember Lucy taking her first week off, and then me messaging my accountant and being like, "Yeah, she's off this week," and then him hitting me with the bill anyway, and I was like, "Oh, of course!" Like because I work for myself and I don't have holiday pay, then them all needing holiday pay, then you've got to kind of budget that.
Yeah.
So that then leads us on to sick pay. Obviously, we don't get sick pay. There is no.
So there's a bit of a misconception with the sick pay thing, because a lot of people think that because they go and get a doctor's note and then they hand it into the employer, that then the employer gets the sick pay, like some what's it called, statutory
sick pay.
Yeah. So that actually stopped. Was it 2 or 3 years ago? And now like employers, they don't get it from the government. So it's like the business funds the sick pay.
Which is hard on small businesses.
Well, especially because you can go off sick for up to a year.
Well, that's always been one of my biggest fears as the breadwinner in the salon. If I broke my wrist and I cannot earn money, what happens? Because even if the government was to give me £50 a week, I mean, what's that buying you? It's not even an Aldi shop these days.
Yeah.
So you deal with income protection, and that probably a lot of people that are listening right now might be like, "Oh my God, that's so boring." But actually, if you don't know what it is, it's too late. Because by the time you learn about it, unless you listen to this, then you're usually learning about it because you needed it and you didn't have it.
I think it says its own thing when you look at protection policies sold. It used to be critical illness policies were the most sold. Life insurance and critical illness were the most sold protection in the industry. Income protections probably overtook that now, because critical illness has become more expensive as more and more people are getting critical ill. Income protection is a policy you can take out, which is relatively cheap, that can provide you with a level of income while you're often sick.
So if I broke my wrist and I've got income protection insurance and I've told them I earn, let's just make it really easy, £1,000 a month, right? Like just so that it's easy figures, will they pay that £1,000 a month?
If you're declaring that £1,000 a month to the taxman.
Right.
Because when it comes to claiming, you can pay for it and nobody will ask for evidence of what income you're getting. But if when it comes to claim, you can't demonstrate what your income was, then it makes it more difficult to claim.
In the form of a pay slip or something.
A pay slip or SA 302s or tax year overviews. If you can't declare, if you can't evidence what your income was, it'll be more difficult for them to pay out.
I suppose because you could say anything at that point. It makes
And
sense.
see the likes of critical illness cover. Like obviously, so in our world, our hands are our livelihood. So like if we were to develop like carpal tunnel or arthritis, that's not effectively, you're not critically ill, but you're not going to be able to do your job. Would that work?
Not for critical illness. That wouldn't form a critical illness, I wouldn't have thought. But that's with income protection. So income protection, it's a few different rules that'll decipher how much something will cost. With income protection, you've got deferred periods. You can have it kicking in after 30 days, 60 days, 90 days, 6 months, a year. The longer the deferred period, the cheaper the policy is going to be. So if you work for the council, you would have it kicking in maybe after 12 months because you'll get 6 months full pay, 6 months half pay. If you work in the construction industry, you'll maybe want it kicking in after month 1. So they're going to pay a lot more for their policy than somebody that's going to be 12 months.
And that's because obviously anything that happens to you within that space of time then won't be covered by the end. I think when you'd set up mine, it was they ask a million questions. It is quite a lengthy appointment with them. Every medical illness you've ever had basically in life, to then determine if there's anything that they will not cover going forward.
Yeah.
So
I guess the other thing for income protection would be you can have it paying out for 12 months, you can have it paying out for 2 years, or you can have it paying out for a lifetime.
So that's what you'd got me. So I was the lifetime one. And then obviously when I had Hallie, we changed it, didn't we? But when I had that, basically it meant that if I got arthritis and I could not return back to the job that I was insured to do, i.e. hairdressing, they would pay my wage for a lifetime and I would still be allowed to work for another company, but it would have to be something totally different. So like say I went from hairdressing to call centre, you know, where I do not need my hands. Yeah. Then I remember thinking, like, I mean, you'd be winning a watch, really. I know that, but you wouldn't
get it. At that point,
They won't continue to pay out. So if you move to another industry, they won't continue to pay out.
That's what the guy on the phone said. But I mean, that was that specific.
They will try and help you get another job in another industry.
Aye.
Because it's in their best interest to try and get you working again. Because with income protection, you can't earn more than you would have earned working. So, so an income protection will generally pay out 60% of what your earnings would be.
Right.
So
Maybe he was just thinking, he was maybe saying I could have topped it up or something with like, I mean, at that point I was watching dogs and I had all these hustles on the go.
But I think income protection's one of the most important insurances you can have because you're still alive.
I bet you there's a lot of people haven't even thought of that.
No.
I certainly haven't actually thought of it.
I had never heard of it until one of my exes lost his job and it was a bit like, oh, do you have income protection?
How many exes have you got?
We don't talk about skeletons in my closet, okay, Thomas? You've met a few.
I have.
That's how I learned about it though. And that's what I'm saying. People that don't know what it is, like we didn't know what it was in that situation till it was too late. Because we're like, oh, do you have income protection? No? What's that? Like, you know, that was that.
What about the life insurance thing? Do you get, like, is that something, I know obviously it helps everyone around you, isn't it? But do you think
Life insurance is cheap as chips. I mean,
Yeah.
life insurance is relatively cheap.
Yeah.
You mentioned business owners earlier on. If you've got a limited company, you can have life insurance paid for by your company.
Oh, right, okay.
Which,
That's what mine does. Thomas set up mine just so that if I die, Hallie gets.
so you have it, your limited company pays for it, so it's then an expense to your company.
Right.
So it's almost like a director's death in service benefit, if you like.
okay.
So that's quite important for people to have because it then goes into trust and it's set up in trust so that if anything happens to you, it goes straight to your kind of family and
Right,
stuff.
okay. That's interesting. I didn't
Hallie
know
would be minted if I died.
So there
That's a big one.
There must be, like, so is there a certain time frame that you have to, because I know if you live to a certain age, it must affect it, surely.
I mean, the earlier you set
Because
up,
everybody's going to die at one point.
the earlier you set up life insurance, the cheaper it is.
Yeah.
I mean,
Does it become void, like, when you get to a certain age?
so it's a term assurance. So generally, if you do it, you'll take it until retirement age. So you have it until age
Right.
65 or 70.
Yeah.
What is retirement age these days?
God, I know.
103.
So I've got twin girls. I think I'll be working until I'm 102.
Think you'll make it that long?
Oh, no. It's only 52 years.
You went really high pitched there when he said that. So I was like, oh no. Listen,
Two residents.
you've got 3 kids, and I'm fairly sure one of them's going to put you in a really nice home. So I think that's going to, you know, you've spread the odds.
now.
You and Lauren will be in Spain somewhere, like in a really beautiful care home facility. They'll FaceTime you. The AI robots will be looking
So that
after you.
office I built out in my back garden, that's where I'll be.
Locked from the outside, though, not from the inside.
But life insurance, the younger you are, the cheaper it's going to be. And it's a term assurance, so it would only kind of, once the term you agree to lapses, then the policy lapses.
It's funny because you only really hear about people taking out life insurance policies like during murder things, don't you? It's like, oh, they took out my life insurance policy. I feel like if I took one out in Chris, people would start looking at me different.
I feel like you would take one out on Chris.
You
That's
do?
making it
That's
sound
what
like a
you-
hitman.
is that not what you
Would
do?
Chris not take one out on himself?
Ah, yeah, right, okay.
Here, darling, here's your Christmas present. I've taken out life insurance
This is
for
moving
you.
into a different type of podcast.
And they say romance is dead, do you know what I mean?
But that's what they say in all the documentaries, isn't it? Oh, they took a life insurance policy out just before they kill.
I think it's America, though.
Yeah, I don't know. There's a few
Lauren's
here.
more insured than I am, which
That's because you're her husband and you're the one that deals with
I
it.
know. I can't do one policies.
You're also thinking, wait a minute, I've got 2 twin girls. If something happens to Lauren, this is not going to be good. How am I going to cope? You'll be needing us for some hair colour.
Sorry, they're going a bit grey at the sides.
I imagine Lauren wasn't here, it would be a whole lot worse. No, so definitely, what was one of the first things that when I had Hallie, I was like, oh my God, I need to get insurance, like, because God forbid something happens to you. Like, certainly before Hallie, I probably didn't ever think about it or care. You know, like...
Well, I had a TikTok injury not that long ago, and it
God.
really made me aware of my hands and how much I need my hands.
Laura took it upon herself to take on a challenge. And Laura is not a celebrity athlete. And Laura uses her hands in her job every day.
Yeah.
And
Didn't
the
work.
positions that she was getting herself into, and then she hurt her wrist, and that was her.
It was about 3 weeks. Solid.
So
And
there
it's
you
my
go.
right hand.
I had a boy that works in the construction industry, and he took a kind of injury at work, and he had life insurance in place, he had critical illness in place, he was paying a fortune in these policies.
She's thinking tick tick.
So he's just thinking, right, I've got that done. So he thought he was well prepared, but then he had an accident playing football, was out for 3 months, couldn't work for 3 months. So straight away he's lost that income, didn't have a great deal of savings in the background. So immediately he's having to borrow on credit cards, he's having to, so income protection can be, and a lot of occasions should be one of the first things that you set up.
And
So I think it's
obviously,
important you protect what you've got, don't you? You
Yeah.
protect what you've got.
Well, especially if you've got responsibilities, like if you've got a family or you've got,
100%.
Mortgage.
mortgages and yeah.
so moving on to mortgage, the mortgage expert guru that he is, Thomas must actually hate me because obviously in my whole adult
All-
life he's dealt with my finances.
I was going to say, I can't imagine how you've coped because all I've heard about is this mortgage, right? So God knows how you do
It's
it.
been stressful. So we're not going to talk about house mortgages, so we're going to talk a bit about like the difference between buying a commercial property and maybe leasing one.
Okay.
Any tips for, because that's a huge thing to think about, whether you want to own your building or whether you're happy to lease. Any pros and cons of both?
I mean, if you rent a place, it gives you flexibility, doesn't it? Gives you flexibility of if things aren't going well, you've kind of not got a noose around your neck, so you can just move to a different location.
But you'd need to wait on a break clause in a lease.
Yeah.
So I mean,
Yeah.
if the break clause is 5 years, then no matter, surely that's more of a noose than whether you own it and you want to fling it on the market next month.
Yeah. If you buy, then if you buy a place, then you'll then head for any repairs, any major works that need done to roofs,
Yeah.
etc. Renting, you don't have that.
How
do you?
easy is it to get a mortgage for a commercial property? So if I've got a mortgage on a house and then I want to get one, would you do it through your limited company? Would you do it?
So you can get a commercial mortgage on a shop, a salon. Lenders will generally want 30-40% deposit. So you've got that initial outlay, whereas if you rent, you don't have that same initial outlay.
30% or 40% is a lot. Like,
If you have a pension in the background that's got a decent value, so say you've got a £200,000 pension in the background, you could use that pension to buy a salon.
oh, is that one of the exceptions to that kind of rule then?
So you then don't need a mortgage.
Right.
You could use that pension and use that pension to buy the salon. What then happens is the salon pays your pension rent, and that's used to top up your pension. So
All
it's
right,
very
that's quite a good way of
it's
doing
very
it.
tax efficient way of doing it.
Really handy if you've got £200,000 in a pension just sitting there.
I was
isn't
going
it?
to say, so you need to have a really good pension.
Yeah.
So it's another way. Obviously, it encourages people to pay into their pension because
But
it
if
gives you more option.
If you had 100,000 in a pension, you could borrow from it as well. You can also borrow from your pension. So you could buy a property at 150, for example.
Is it tax free to borrow it?
You'll pay interest on it, as you do.
So it's your own money, but you're paying interest on it anyway. Oh, that's nice.
Then you just pay rent for to your pension.
I don't think people know about these. I think that's fascinating.
It's became more and more popular these days.
Yeah.
And it's SIP, self-invested personal pension, and so it's becoming more and more popular now
to do it that way.
Do you think there's an age for someone like, so people listening to this just now who are thinking, oh my God, I don't have a pension. Is there an age at which you would say, like, you're not worth it now, let's look at another option instead? You know, because obviously you're saying like £100 a month for 20 years. Like, what happens if someone doesn't have that? And then now they're looking at like, I kind of do want something. Is there like an investment that you would...
It's ever too late, is it? I mean, I think the problem you've got is, like I mentioned before, too many people don't have anything set aside. And they're relying on a state pension.
That won't exist, let's be honest.
Right now, was 65, it's now went 66, now it's 67, it could be 70.
Can you imagine hairdressing at 70? That scares me.
I wouldn't want to be doing it even.
I love my job, but you'd be crippled.
Yeah.
Like, I already feel we get like aches and pains. You're on your feet all day. I mean, oh my God, and what would the trains be like at 70? Can you imagine? Like, can you give me robot hair?
I know.
What? I want my hair to look like
I might have taken over by then.
Can you give me TV screen hair? Like, what's that? Like, it's where you stick a TV to somebody's head and they just walk about with like different colours. I don't know, but yeah.
And I guess it's back to the whole thing.
Worry.
Out of sight, out of mind. And you just you just don't worry about these things until it actually hits them.
I think
square between the eyes.
Some people probably as well. This is a horribly morbid topic, and it's probably a bit controversial. But you think about who you've maybe got in your family where you're going to inherit, and then that maybe puts people into a situation where they get a bit too comfortable. Where, do you know what I mean? Like, I've had clients before say to me, I don't bother with pensions because, like, you know, my mum's got a big house or whatever, and so when the time comes, like, I'll get that, but then you're going to get whipped with inheritance tax as well. So is that not 40% now?
40%. So if a husband and wife, if they've got more than £1 million, they'll pay 40% tax.
Who are all these folk that you know with £1 million?
There's loads of people. There's loads of people out there that between husband and wife have got more than £1 million.
Well, when you think about houses alone, I mean, by the time most people by the time they get to maybe retirement age, from years ago, more of them have paid off. I mean, we'll probably never pay off a mortgage, but a lot of people, well, it depends how much your house is, but yeah, a lot of people don't have like mortgages, so say your house is like 400,000. There's already nearly £500,000.
I mean, if you've got people down in London, your average property is probably £1 million.
It seems like a lot of money, £1 million, but yeah, I can see why.
You couldn't retire on it.
No, absolutely not.
I mean, pension rules are changing in the foreseeable future. That used to be that if you had money in a pension, that didn't form part of your estate for inheritance tax, whereas the government changed that. And as of 2027, I think it is, it's going to form part of your estate. So that's going to make inheritance tax more popular.
So it can push you even over the boundary even more.
It's actually terrible though, isn't it? Like, someone pays tax their whole life on every single product they purchase, on every thing that they borrow, every pound that they earn, and then their family have to pay 40% on it when they get it. It's really bad.
I know.
It's really bad.
I mean, people worry and think it's overly complicated setting up a pension, but I mean, it's relatively straightforward. You can go in and do it yourself. You can go into...
You're a great advert for yourself here,
no,
Thomas.
But you can. So you can get in and set it up on AG Bell or Hargreave Lansdowne and just pick a Vanguard ETF or something. And
it's like he's speaking a foreign language.
I know, I'm
ATL, Vanguard ETF.
And start contributing monthly towards this into your pension.
What's ETF?
Exchange Traded Fund.
Okay.
Yeah,
so
see,
it's just
you're
a type
saying
of fund.
it's dead straightforward. That's because you work in the industry. Do you want to show them how to cut a graduated bob and just tell them it's dead straightforward?
We'll put them at the bottom of the screen. We'll put what these different things mean for me.
So as you're growing your portfolio, then you can use one of these kind of funds. Once you get to the point where you've got a decent amount of money in it, you then want it managed. That's kind of when somebody like myself can come in and kind of help them manage it.
So I actually was just thinking there, because it was something that I was blissfully unaware of till I met you, and this is kind of not business related, but I think it affects like so many people, overpaying your mortgage. Do you overpay your mortgage?
No.
Right. We're about to blow your mind, because in my head I always thought, why would I be overpaying that? Why would I want to pay more into that? It knocks years off and like tens of thousands of pounds of interest.
Is there not a fine if you overpay it?
I'll let Thomas take over.
If you're in a fixed rate, if you overpay your mortgage by over 10%, then you'll pay a penalty for that. But
Yeah.
But you're not gonna.
you're not going to overpay more
No,
than 10%.
but that's what always I think sticks in my mind.
So see on mine, right? See when I went on the calculator, and let's just say you overpay by £100, it reduces the term by like a month. And I was like, wait, what? How is so little an overpayment actually making any kind of difference to this? But it does. It's huge.
I've never been an advocate for overpaying
Have you not?
your mortgage. I don't want this to constitute advice here, but if you overpay your mortgage, then that money's gone.
I know I feel like
Isn't it?
you're just throwing it down the drain. I know you're not.
No,
but I
you're
would
not.
rather it was in a savings bank.
So, but you could set up an ISA and put that into a stocks and shares ISA. It's that overpayment, and you arguably get a better return growth wise than you'll pay interest on a mortgage. So if you were putting into an ISA every month, you're getting a better growth than you're paying interest. Plus, it's accessible. So if you need that money for kids' birthday or special event, then it's there. It's not locked away in a mortgage.
So obviously, like when we'd set up mine, I had overpaid by a wee bit just with the needs of what I needed to get deposit back and whatever. But it is wild to see how your money is heavily taxed on everything, and there's ways to dodge this. So I suppose the outcome for
Dodge
the...
it. I don't know if dodge is the right word, Lisa.
Right, okay, legally, Lisa over here. Dodge.
It's back to that accountant chat.
You're just being a wee bit more careful with what you do. But this was the point of this episode. It wasn't to sort of highlight like how you can be like bad. You're still going to do things the right way, but there's just more effective
Lisa,
ways
it's
of doing
tax
it.
dodging tips.
No.
So,
Where's Lisa this week? She's in jail.
Sorry, I'll carry it.
Some listeners might go,
guests.
thank God.
I guess it's tax planning,
Yeah.
isn't it?
So
So if somebody's a higher rate taxpayer, so if you've got employees within your company that are higher rate taxpayers, you can do a thing called salary sacrifice, where they can put money into their pension and they'll get higher rate tax relief on that. So that takes them back to being a basic rate taxpayer. And so £100 contribution to the pension is only actually going to cost them 60 because
Right.
they've got such massive tax relief.
Right,
on it.
okay. That probably wouldn't really affect many stylists under someone else, as in like, because obviously what is the high tax bracket? 60 grand a year.
43,
Oh, right, wow.
43,652, I think it is.
Jeez, it's not actually that
Not that high.
much. But I would say that probably unless you're at, like, you know, working really high up.
Even as a
Manager.
limited company, so if you've got your own limited company, you make contributions from your limited company into a pension, that contribution goes in before corporation tax, so you're saving 25% tax on that.
It shows on the payslip, doesn't it? It'll come up.
So you're saving 25% corporation tax on that, and then when you come to get your pension, you're able to take 25% of it tax-free. Whereas if you took that money out of your business, you're paying 25%. There's no tax-free money.
Yes, it's just being clever about it, isn't it?
And that's where someone like you comes in. See, I'm not saying dodge it. I'm just saying get a Thomas in your life that then can say, well, don't do it like that, do it like this.
So I
Your
wanted
money's
to
better
pick
spent.
your brains about Bitcoin. What's your thoughts on Bitcoin? So Chris Wright is obsessed with, we've got investment in Bitcoin, we've got investment in silver. This is the latest thing. So it's actually like the price of silver has rocketed up, although it's dropped a wee bit again. I know everything about it. He talks about it every night.
Silver and gold are
So,
a hedge against
yeah.
inflation, aren't they?
Yeah. And there's something physical in your hand.
Sorry, are you walking about with gold blocks in your lips?
Silver.
You've got silver blocks.
Well, let's not tell everyone because then I don't
on a
want to get broken. But yeah, if you invest, you can get coins.
Oh, so you're not talking about like an online buying a share.
No,
You're buying
physical
bits
silver.
of bits of it.
Yeah, but Bitcoin, and obviously, I mean, for ages, everyone was talking about crypto going, Bitcoin, and
I just don't know enough
it's
about.
dropped a lot now, and apparently it's because everybody's taking their money out and buying silver, but you can't get silver now because everyone's been buying it.
All right, I just buy shares on Amazon anytime I've got some spare money.
I think the thing is when you fit, so silver will never drop its value.
I don't think Amazon will either. I mean, they're same day delivery now.
Not to the same amount as what it has. It's went from something like £30 to £80 or something.
All right.
Bitcoin is unregulated, so it's back to these unregulated investments. So it's going to be more volatile than.
Do you know why they say that
investment.
they've thingied the Bitcoin is dropped? Because it's been some kind of rumour that it's related with Epstein.
Follow us for some more celebrity news.
They started it.
Well, I don't know if we can call him a celebrity anymore. Am I just like blobbing out all sorts of wrong words here? Like,
I know.
Must just be
But I
me.
just wondered if you knew people that had invested in it.
I knew guys that had invested into Bitcoin at the very, very start.
Oh, how lucky would that
And they
be?
must have made an absolute fortune.
Yeah.
I've just never looked that much into it, if I'm absolutely honest.
Do you do like stocks and shares in like normal things like Amazon, Royal Mail, whatever?
So as part of our portfolios, we'll have individual stocks within that portfolio. That could be like Nvidia or Amazon or AMD, or various different companies. But silver and golds will always form part of our asset allocation because they're a good hedge against inflation.
Oh, here's the thing, right? So let's hypothetically say that you start buying chunks of gold, blocks.
Bars.
And then it comes to selling of that, and then you're going to end up with a wad of cash. And then it's like, let's say, it's taken you a year to buy one of these because you've put £200 a month away or whatever, and you've just saved up. How are you then declaring where that money came from?
Well, you have a receipt. If it was an online transaction, you have a receipt for it.
You'll still pay capital gains tax on any growth you've got when you then go to sell it.
Oh, right,
But the issue you have with gold and silver physical assets is storage of it. You then have to pay cost for storage of it and blah blah.
How much have you got?
It depends how much you've got. You got a gold mine.
I'm imagining under your bed.
It's like Aladdin's cave.
Yeah, she doesn't have a mattress. She just sleeps on gold blocks. How the other half live over there? Do you know what I mean?
Yeah, there you
No,
go.
okay. So top tips on investment: just buying blobs of gold, just walking about with them in my bag. Feels very Pirates of the Caribbean.
Yeah.
I know what I'm getting you
That's
for your
okay.
next birthday, like a big medallion Argos ring.
Oh, God. What was that? What was
A
it called?
sovereign. What do they call them? A sovereign. Yeah, that.
God, my dad had one of them.
Got to take it out. It might be worth some money now.
Do you remember everyone used to have like all the gold bangles and they had like twists and stuff in them, and then people used to have big chains with their name. They were like big bulger chains. They must have been worth a
My
fortune.
mum now wears them. We call her BA. She's walking about.
Oh my God. And some more stocks and shares advice from Thomas, the gangster. No, just kidding. If anyone's got any questions for you, then we could take some and submit them. I think that's been really interesting though, like covering bases of different things to do with the financial work, because I think certainly I turn off at numbers. Like, it stresses me. Well, you'll know because you've been dealing with me for the last how many remortgages and how many years, but because it is like, you need to know that you trust somebody to just take over the situation and know that the money's going where it should.
And also know what's available out there. I think even just being, even just knowing that you can have all these like policies and things. A lot of people don't even know that, don't even think about it.
And they're starting like cheaper than, like £20 odd a month, £30 a month. It's totally affordable. I think that's the other thing. People think that it's a really unaffordable situation and like, oh my God, I'm not paying, hundreds of pounds a month to something I'll never use. Well, £20 a monthth's actually a really low gamble, so that if you break your wrist,
Yeah.
you're like, doing a TikTok challenge like Laura. We will send you that.
What exactly were you doing? Was it a game of Twitter?
So it was like a kind of routine.
Oh, she's going to redo it.
No, I'm not. It was like a balancing thing, and you had to be on your elbows, and then it didn't work anyway. But actually, at the time, I didn't realise I'd hurt it. That's the thing. So there must be a wee bit of level of fitness there.
She was sponsored by sort of vino, I think, where there was wine involved in this ideal situation of
And I think it was more to do with the amount of times I had actually did it. I think it was more
repetitive strain.
So it's
What
funny
kind of
when
podcast is this?
it's funny when you hear somebody falling down the stairs or something. First thing you ask is, how much wine was involved?
Yeah. No, but thank you so much for joining us today and
Thank you for the invite.
answering some technical questions on legal methods in which to capitalise on your. I mean, no, somebody else finish this because I'm going to say something wrong. What would we say? Legal ways in which to enhance your portfolio and
Find the loopholes.
that sounds illegal. Thomas, you want to finish it off for us?
Give you wealth when you get to retirement.
Yeah, that
Instead
sounds
of
good. That
relying
sounds really
on
good. We
your
should have
state
left it to you.
pension.
Yeah.
Yeah.
Legit.
Legitimate ways
Legit.
in which to manage your
No
finances.
dodgy, legit.
Wink.
He's like that. Oh my god. If you would like more information or you would like a specific question answered, you can submit them to us or you can contact Thomas Marshall directly through. Would you prefer to be contacted through an email?
Yeah, Thomas at kpwinvestments.co.uk.
Perfect. We will link that at the bottom of the screen. Thank you for watching, listening, liking, and subscribing, and we will see you again next week. Bye. Bye.